All right. All right. Good morning or good afternoon, depending upon where everyone is. My name is Sandrine Zoku. I am the Executive Director of Invest Africa. We are a network of investors, business leaders, and entrepreneurs who are all focused on doing deals on the continent. I feel really honored to have an incredible panel today. Of course, we'll be talking about the relaunch of the agro-processing industry. All of the conversations that I've seen on webinars have really been focused on how we really push ourselves through this tremendously difficult time of the pandemic. But we really wanted to center this conversation around what happens after COVID-19. How do we prepare and make sure that the industry is able to evolve beyond the COVID-19 pandemic? So I'm super excited to have our senior advisor, Mima Nedelcovych, who is going to be leading this discussion. For just to give a couple of house rules, please feel free to submit any Q&A questions that you have within the Q&A box. Please go ahead and submit that there. Otherwise, feel free to introduce yourself in the chat. If you have any comments, go ahead and submit those in the chat, but we'll keep the Q&A box for any questions. We will be peppering and throwing in those questions throughout the discussions, and making sure to also provide a little bit of time at the end to dedicate solely to your questions. So Mima, I'm gonna throw it over to you to get our conversation started. Thank you so much, everyone, for participating.
Wonderful. Thank you very much, Sandrine. And good morning, good afternoon, good evening. I know we got people from around the world, so we've got all the time zones covered. My name is Mima Nedelcovych. I'm the chairman of Africa Global Schaefer Group based in Washington, D.C. and in Baton Rouge, Louisiana, with our focus being on agro-industrial, renewable energy, clean operations throughout the continent. We've been operating in Africa over 50 years now, very unusual for a US company. I've spent my whole professional life somewhere on the continent, in fact. So I'm here, as Sandrine said, to moderate as senior advisor to Invest Africa US. It is a group of investors, primarily US-based, investing in Africa across all sectors. Today we'll be focusing, of course, on agriculture. And the topic is, as we know, is post-COVID agriculture and agribusiness in Africa. What will it look like? We keep speaking of COVID, what's happened on the emergency side. What I really want to do with this panel is to focus on the post-COVID. What do we do as we emerge out of it? The pandemic, we all know, is clearly, the lockdowns have ravaged the African economies. I don't need to go over all that, much as it has ravaged the industrial world. Demand for African raw materials has plummeted, as have the prices. Earnings from tourism industry, of course, have zeroed out. We all know it will not be easy to come out of this tailspin, but the question is, how do we do it? And what could be the role of agriculture and agro-industry as that trigger? In the end, pandemic or no pandemic, people have to eat to survive. That's a basic fact. So while food continues to be produced and somehow arrives to the table of the consumer, the lockdowns have slowed down deportation into the continent big time, and local and regional supply has now become paramount. Ironically, the highly unstructured nature of the whole agri-allied value chain in most countries throughout the continent made it, in fact, more resistant to disruption. So it's quite an irony there, because informality and lack of structure might impede scaling and growing, but it's certainly proven to be more resilient to disruption. So I would like to pose several broad questions to our illustrious panelists to consider and give us their perspective. Just to kind of set the table, set the scene. One, can African countries take advantage of the realities imposed by the pandemic that disrupted the imports of food commodities to strengthen their own abilities to produce, process, package, and distribute locally and regionally produce foodstuffs to the burgeoning urban populations? Two, And once borders begin to open and international cargo starts to flow, can the African countries finally capitalize on the abundant arable land we all keep hearing about that they have available, that we have available to enter into export value chains of finished food products? And finally, what will agriculture and agribusiness look like in the post-COVID era? Food security is certainly important, but so also is the spark that agribusiness can provide to kickstart economies and create the jobs and opportunities for that growth as we return the economies back. So I would like now to turn to my three panelists to make quick introductions. As in the interest of time, you have their bios in your invitation, so I won't go through all of that. Each one was selected very specifically to represent a particular point of view. We have amongst us a lender, Atsuko Toda from African Development Bank, and a veteran in the form of Stuart Bradley from Phatisa, and an owner-operator, Fatai Yusufu, Yusol Foods, and the Fayez group of companies. And I want to thank them profusely for accepting to participate. Atsuko Toda is the Director for Non-Sovereign Lending for Agriculture and Rural Development at the African Development Bank. Welcome, Atsuko. The AFDB needs little additional introduction other than to emphasize that feeding Africa is very much one of President Adesina's high fives. Stuart Bradley is managing partner at Phatisa, an African firm with deep roots in private equity, whose mission is feeding and housing Africa. I dare say perhaps one of the preeminent PE funds in agro-industry focused on Africa. And finally, as owner, operator, and developer, Fatai Yusufu is founder and chairman of the Sacramento-based Fayez group of companies, a U.S. food processing and wholesale distribution company focused on African and Caribbean food products, with a very interesting story of both bringing product from Africa as well as shipping product back to Africa. So with that, each panelist will have 5 minutes to give us a brief overview of their organization. That will be followed by moderated conversation I will lead amongst us for 15 minutes. And then we will open it up for the audience question via the chat box for 15 minutes. In the meantime, please feel free to send in your question at any point in time, and we'll try to integrate into the discussion. We will keep this to 1 hour. I think that is, we're all getting webinar to death, so the whole point is to make it sharp and to the point. So with that, may I now turn to you, Atsuko? You have the floor. Give us a quick description. Thank you.
Thanks a lot, Mima. Thank you for the introduction, and thank you very much to my fellow panelists, because I think this is going to be really interesting as we have slightly different profiles. And thank you for the participants. I'm very happy to be here today. Just with regards to how the African Development Bank works in this space, as you know, we have been implementing a strategy called Feed Africa, which is about the African agricultural transformation. So there's a lot of conversation that the transformation really hasn't happened yet. But I'd like to bring up a number of aspects of that, because the private sector investment in the agricultural space is very important. So on one side, there is a massive urbanization on the continent. There's also a growing middle class, a huge growing of the population. So there's a number of trends by which production and the midstream has to become stronger. So that's really where large enterprises can structure food supply chains, and mediums to smaller enterprises really provide the employment and the other parts of the value chain that are the supply chains that are extremely important. In that context, the African Development Bank, we do debt and equity. Most of our equity goes through private equity funds like the one that Stuart is managing. And with regards to debt, because we are a relatively wholesale bank, we look for those larger companies that can actually play a strong role in structuring these value chains. I think with regards to some of the questions that Mima was asking, we found that the supply chains have been hit because of transport restrictions and border restrictions, movement restrictions, but they haven't been as hit as hard as people were projecting. I mean, people were talking about food security issues and all those types of challenges, but actually they've remained relatively resilient. And I think when we talk about the larger companies, there's been a lot of source switching that has been happening. So I think that has been helping. And also the lower cost of oil has maybe helped. Perhaps some of the cost drivers actually has played a role. But the markets have remained relatively resilient. In terms of demand from overseas markets, perhaps that's something that we need to look at. But if African countries can take advantage, we are very much looking forward to that happening, to see shorter supply chains, African intra-regional trade, and promoting that to happen. I think we will be much more focused on finding companies that are local sourcing and that are working with small, medium enterprises to be structuring those value chains. And also, I think as borders begin to open, in terms of cross-border trade, what informally is happening is exactly goods that are going across the borders. That the informal trade is actually around, a lot of it is around food. So as the African Development Bank, we will continue to look for these type of transformational companies that we can invest in to be able to support the agricultural transformation. Thank you very much.
Thank you, Atsuko. Excellent and brief presentation. Thank you for hitting the highlights. Stuart, may I now turn to you, please?
Yeah, thanks, Mima. I think just to echo Atsuko's sentiments in terms of thanks for inviting me today to be in such illustrious company. Also, I must declare Atsuko as one of my investors as well in my fund, so I've got to behave today as well.
Full transparency.
But I mean, yeah, a bit about Phatisa. I mean, I'm sitting here down in Johannesburg at the moment in a sort of semi-lockdown. We're coming out of it slowly. But Phatisa, yeah, we're a food and agribusiness focused fund. We've got a separate fund as well that's in affordable housing, but that's not the focus for today. We've got about $400 million under management. Our first fund launched in 2011, investing across the food value chain. So from inputs to agriculture, we did primary ag in our first fund, all the way through downstream processing, production, distribution. That fund's fully invested. We've made 3.5 exits now out of that fund. And we've since raised our second fund, which launched beginning of last year. We've made first 2 investments in that. We're still busy closing that, so we're still doing a bit more fundraising. And we've made our first 2 investments. So we've had a bit of a change in terms of investment mandate. So we're much more focused now on agribusiness, so sort of upstream inputs to ag, mechanization, fertilizers, crop protection, seeds, infrastructure, irrigation. We're not doing primary ag, pure standalone primary ag in our second fund. And we learned lots of lessons, I think, through our first fund. It's difficult for us. We're still quite short-termist in terms of private equity even. I mean, we're still investing for sort of 5 to 7 year investment horizons. Our funds are 10 years in length. It's difficult to do primary agriculture in that period. A lot of it in Africa is going to be greenfield, early stage. It takes time to develop and then to get it profitable and then to exit it. Doesn't really happen in that time frame. And then we're investing right through the value chain. So processing, production, distribution, storage, cold chain, anything that touches the food value chain. And because of that, I guess we're structured differently in terms of our team. So we've got kind of 2 types of people within our firm. We've got a deal team. So we've got people who have got my sort of background, pure private equity individuals who have come out of sort of structuring generalist transactions, corporate finance, private equity. But then we've got a portfolio management capability. So we've got individuals in-house who have come out of the likes of Unilever, Procter & Gamble, Diageo, Lonrho, the old CDC, which is where a number of us came from, managed businesses, Imperial Logistics in South Africa. So these are individuals who actually don't have a private equity background. They have an African industrial operational background. They've been managing directors. They've been heads of sales and marketing. They've been route to market specialists. They've been, finance managers. And really, that's the heart of our business. I mean, that's what it's all about. It's, I don't want to be blasé about it, but I mean, we can all find a deal and invest in a deal and structure it, but it's actually what you do next is the most important thing. So, you know, diligencing it, picking the right deals, but then building out those 100-day plans, but also, you know, building out those 5-7-year strategies of how do you make these, how do you grow them? You know, how do you double, treble the size of this business? How do you improve governance, systems, processes? How do you get succession in place? How do you drive to the exit? How do you make this business more attractive so that a strategic or another financial investor is going to want to take this business off you at the end of 5 to 7 years? And really, that's the core of our business. And then around all that, you know, we're very big as well. Obviously, ESG is important, as Atsuko will remind me. So, you know, we do a huge amount. We've got a team around that. So that's very important in what we do. And then impact. You know, a couple of years ago, we actually split impact out from ESG. So we measure in terms of what we're doing in Africa: job creation, quality jobs, gender. We're aligned to the SDGs, food production. You know, in our first fund to date, we've produced 1 billion eggs. Was a stat that hit me this morning. So there's a lot of eggs. But I think as Atsuko said, I mean, it's a resilient sector. I mean, that's the one thing we've found through these lockdowns. I mean, thankfully, all our portfolio companies have remained open. They're operating. Some have, you know, I mean, in terms of trading, eggs, for example, I mean, you know, there has been no change in the buying patterns of eggs. I think what we've seen possibly is sort of, you know, trading down. So you might see some middle income now who are being affected by what's happening and starting to trade down towards the bottom of the pyramid. I think that's a theme that we're seeing, but it's certainly not affecting the sale of an egg. People still have to eat. But there's other things that are affecting us, you know, currencies, there's other factors, which I think we'll probably get into during the conversation.
Wonderful. Thank you very much, Stuart, for that presentation, your perspective. And if I may move now to Fatai, Yusufu, with the Fayez Group of Companies, has a very interesting story. So Fatai, would you tell us a little bit about your companies and what you do?
Hey, thanks a lot. Thanks, Mima. Thanks, Atsuko, and thanks for Stuart. I'm very happy to be with you guys. I mean, this is just a powerful panelist that that I'm able to associate with. As both Toda and Stuart already said, our focus is in Africa. Okay, and we've been doing business in and out of Africa for the past 30 years. Okay, we're probably known by our brand of Ola brand of products. Okay, we are in South Africa, we're in Nigeria, we're globally, except in South America. Okay, what we do is we want to empower the farmers in Africa. We have a presence in Nigeria. We have a presence in Zambia. Okay, working with local farmers. Okay, we bought a lot from especially women farmers in various countries. We're in Ghana. Okay, and we do a business in Sierra Leone, and we do make shipment to Kenya. We've already bought a lot of stuff from them. And yeah, as you said, Stuart, I'm very, very impressed for your 1 billion eggs, because it takes a lot of work and energy to get the thing going. Okay, so I will say that I am very optimistic post-COVID for Africa. Why? Because the COVID already showed how vulnerable we can be and how we as Africans can help ourselves in promoting the middle class, okay, and promoting the consumption if we have the mechanization to do it. And how do we get the mechanization to do it? Okay, is by working with people like Atsuko, people like Stuart, and making sure that we provide employment for all Africans, without regard to gender, without regard to physical disability, without regard to where any hindrances. Okay, as far as previous group of companies is concerned, we are in Africa fully, and we have employed more than 1,000 both professional and labor work in Africa. And this one is not just in one country. I'm talking about across Africa. Okay. So having said that, we still have a long way to go. Okay. Africa is truly the breadbasket of the world. But if we don't, we do realize it. But if we don't do anything about it, then it's just going to be a talk. But at the same time, with the cooperation of Phatisa, with AFDB and other fellow investors, I think we can move all this stuff to the higher level. Okay, we can move it to the realization level. And that one I know, and I'm just convinced that it can be done. Because my experience in Africa for the past 30 years has shown me that we are making progress. It may not be as fast as we realize it, but we're still on the right track. Okay. My goal and what I've been working on is to make Africa become competitive in the world market, in the global market. Then how can we do that? We cannot be shipping the raw materials away from Africa every time. We have to add value, and that is exactly what I am doing. Okay, my company is so well into Africa. Okay, that we can do more by not only by investing in the human resources. We have to invest, which we are. I am, my company is, and we still have a long way to move that investment to fruition. And can we do it? Yes, we can. Post-COVID, I'm convinced that this one open up our eyes, that we have that opportunity to make sure that nobody goes to bed hungry. Thank you.
Thank you very much, Fatai. I think you set the scene here for a conversation we're going to go forward, and that really is, again, to remind everyone, what is that opportunity post-COVID? How do we, as people say, make lemonade from the lemons we've been dealt these past few months? Atsuko, let me turn first to you. And as I said, I mean, this for African Development Bank and the high fives, the President Adesina as a former Minister of agribusiness, agro-processing, value addition, industrialization. I mean, this is all core of what the bank is, really, really up to. So my question is, going sort of post-COVID, having said that, obviously we all have to eat, that's clear. But how do we also use agro-industry and agro-processing to kickstart economies? Are there any thoughts, initiatives, the African Development Bank, in terms of how to really do that spark plug kickoff, if you will, initiation once we start getting economies back? And how do we, to use President Adesina's term, how do we turn corn into cornflakes in the value addition? I had to throw that one in. Thanks, Atsuko.
Okay, thanks a lot, Mima. As you know, one of the key flagships that President Adesina has been discussing with a number of heads of states in Africa is really to set up the hard and soft infrastructure. So as much as we need enabling policy, as much as we need the private sector, as much as we need strong anchor companies, we need the hard and soft infrastructure downstream to be able to get these enterprises to invest, de-risk the environment for investment. So that has been a huge push under President Adesina's leadership within the Feed Africa program. So that I think is really important for small, medium enterprises that need the infrastructural base. At the same time, there's been a huge push to increase productivity because on the African continent, if you compare it to other continents, productivity is still low. Institutional capacity in terms of aggregation is still relatively low. So in order to take advantage of the comparative advantages that Africa has, which are land and labor, it's really about making the upstream, the productivity greater. So there's been a number of efforts on the technology side to be able to do that. Thirdly, with regards to post-COVID, I mean, the three segments where we see a lot of possibly new business coming in is really the digitalization, which I think all sectors are talking about. How do we make supply chains shorter? Two, I think it's really logistics, cold chains, storage. So how do we actually work around finding business opportunities that have strong logistical capacity? And then thirdly, the food safety component. I think that's the other area where I think there will be a number of opportunities where we need to make investments. Thank you.
Thank you very much, Atsuko. Stuart, investor, PE fund, what in your mind is different in the environment as we come out of COVID? I mean, what have you seen that has changed? And I mean, we've been for years, we've all been practitioners in the agro-industry, been talking about the potential, the arable land, inexpensive labor, the markets that are now growing. Is there something that's happened that really will finally trigger us to become world competitive, as Fatai has said, and I'll come back to him on that issue later. Please, Stuart.
Yeah, thanks, Mima. I mean, look, I mean, we're still early days coming out of this thing. I mean, most of us actually still aren't coming out of it yet. We've got a way to go yet. I mean, I would love, I mean, my heart says I would love to say that this is, finally the turning point for African ag, and this is the silver lining, and we're going to emerge from this, stronger and, take on the world markets. But I think the pragmatist in me says it's just this thing's made life a lot more difficult for us. But having said that, I also share Fatai's view in terms of I'm very optimistic still about the sector. I mean, to be honest, we're less focused in terms of we always were less focused on, we're not looking to feed the world. We're not looking to send food from Africa to the rest of the world. That really it's never really excited us. I don't know. I think and I also think the global consumer is actually starting to think twice about that. In terms of food miles, in terms of CO2 emissions, in terms of do people really want, are they always going to keep wanting baby corn and mange too flown from Zimbabwe or East Africa into Marks and Spencer's and Waitrose in London? So that's not for us. We've always been about investing in food in Africa to feed Africa. We love regional exports, so we like moving products around. That's how we can still get dollar earnings, etc. But we're very much sort of keeping distribution within Africa. I mean, so at the end of the day, I mean, 60% of employment in Africa is in the agriculture space. So it's so desperately important. But we are, there's all sorts of numbers being bandied around in terms of contraction 2.6 to 7% due to this pandemic. We don't know yet. But we do, we talk about Africa sort of exporting raw materials, but we also import a huge amount of raw material as well. I mean, in 2018, we imported 40 million tons of cereals into Africa. So, I mean, this is sort of stuff that we can actually start producing ourselves. And I think it comes to some of the things that Atsuko said. We've got to get smarter in terms of our agriculture. We've got to get better yields. We've got to get much better in terms of post-harvest losses, in terms of storage, I think as Atsuko says. So we've just got to get much more efficient at all of this, so that we're not only producing enough, to feed our own smallholders, but also start selling that product as well into the markets. And at the same time, I think, our markets are going to struggle. We're seeing currencies that are under pressure. We've already got low sort of currency reserves. We're seeing, falling prices of exports and cash crops. Plummeting revenues from stalled economy, stalled industries like oil and tourism, which is all affecting our ability to purchase international food. So, I think there's, that's going to put a constraint on importing food into Africa, given where the position is. I think it does create some opportunities, pockets in terms of export, because obviously that means in reverse that our food products from Africa are going to be cheaper now because of currencies. But, we've still got to wait for the supply chains to unlock. You know, at the moment, there's no flights coming out of South Africa. There's few coming out of East Africa. So, you know, the horticulture sector, you know, the vegetable industry coming out of that is suffering at the moment in terms of exports. And then I think, you know, our own consumers in Africa are under pressure. But as I say, I mentioned around the eggs. I mean, what we are seeing though is a trading down. So I think the middle income consumers are going to be under pressure in the short term, you know, just because of other industries and company closures and other stuff that's happened. But I think if you're focused on supplying bottom of the pyramid, like eggs, basic commodities, I think that's where you can capitalize going through this. You know, we're going into this now, you know, we've just raised a fund, you know, so we've got quite deep pockets at the moment and firepower to invest. Perversely, you know, and this has been a horrible pandemic, but it is actually giving us opportunities here. I mean, you know, we're going to end up we've made 2 investments, we will make another 8, maybe 10 investments. So we're quite picky about what we do. You know, we're not, you know, we use a rifle, not a shotgun in terms of our approach. So I think, you know, our view on this is actually this could be one of our best buying and investing opportunities that we will see in a lifetime. You know, I think those business owners that are serious, that want to do this for the right reasons and trade out of this, need capital. We're going to be very selective in terms of looking at businesses that were profitable and efficient going into the COVID outbreak, and that have had, you know, hiccups and wobbles because of COVID. Those are the types of businesses that we will focus on. And I think those businesses will be able to capitalize. They'll be able to take market share. They will come out of this stronger, you know, if they've got a good partner with them, but they are going to need capital, whether it's from African Development Bank, the likes of us. There's a lot of other people out there with capital. They're going to need that assistance to get through this. But I think perversely, yeah, investing in sort of 2019 2020, 2021, I think it could be one of our best sort of buying opportunities that we're going to see in terms of the potential growth we're going to have going forward. So yeah, I mean, you know, perhaps just to share some other things. I mean, you know, so, you know, we're very focused on, I think, as Atsuko's mentioned, in terms of smart agriculture, smart technology. I mean, perhaps just to cite an example of a business we had in our first fund, which we've now exited. So we were focused on fertilizer. So, and 2/3 of our sales, it's focused on Southern Africa, selling 220,000 tons of fertilizer when we invested. So we granulate, we blend, and we distribute into Southern Africa. 2/3 of our customers are smallholders. And a lot of that was donor programs. So donors providing national governments with money for fertilizer. And then what governments, for example, Malawi was doing was giving smallholders vouchers. And the smallholder then was coming to one of our retail stores. So we had 111 retail stores, little farm stores in Malawi. And a smallholder would come along with a voucher and they get 1 bag of fertilizer for the season. But it's one size fits all. It's the same formulation that's been running since the 1960s, 1970s. It's never changed. No matter what you're growing, whether it's groundnuts, whether it's maize, soya, whatever it might be, you get the same bag of fertilizer. Yep. So we ran a program there with our TA facility, and we mapped the soils and mapped what it was smallholders were doing around 30 of our stores, and then linked up with the University of Columbia, and we developed 6 bespoke fertilizers. So depending on what you're growing, in what soil type, and where you're growing it. And then we ran trial plots for smallholders and trained them. So we trained 15,000 smallholders. 70% of those were women. And we demonstrated if you put the right type of fertilizer on the right crop in the right way on the right soil, we increased their yields from anything between 18% and 30%. So massive yield improvement for no extra cost, giving the smallholder better yields, better production, giving Malawi better food security. And we were getting to sell more fertilizer. We grew that business from 200,000 tons to 500,000 tons in 5 years. So, you know, a win-win for everybody. And I think these are the kind of things that we're going to be looking at emerging from COVID, is just getting smarter.
No, that's a wonderful, wonderful story, wonderful experience. And really is all about making agric a business. You know, it's not a vocation, it's a profession, it's a business. So the whole point of everything is every individual, whether it's the farmer, the processor, each one needs to pocket more return for their investment, whatever that might be. That's a smart sort of the agriculture speaking about. Come back to the cornflake story. But Fatai, you have a very interesting case of actually with the Ola branding. You know, how do you see the future going forward? And is the disruption, because you know, you have the disruption of the importation of basic raw materials, clearly, of commodities, whether it's rice or, you know, maize, whatever it might be. That does create opportunities, oil palm, for production locally to do import substitution. But there's also the opportunity then once you're in large markets and able to supply and have a strong base of domestic consumption and supply, that is when you then have strength to export. How do you view that in this new world? And
Thank you, Mima. Thank you, Mima.
One of the questions asked specifically to you was, in fact, how does your business model work? And there was a question on that'll come back to the other panelists on the food safety aspects, because if we as African food producers going to enter the world markets, the question of food safety, the whole certification, traceability issues have got to be clearly handled. So from your standpoint, I'll come back on that issue to Atsuko and Stuart, please. Fatai.
Okay, hey, thanks a lot, Mima. And I do agree with Atsuko on the logistic challenges that have emerged during the COVID pandemic. Okay, we have been challenged in receiving our raw materials from various parts of the country. Okay, and secondly, as far as Stuart said, I agree with Stuart. We have to feed Africa first. At the same time, we shouldn't be so myopic in our view just to feed Africa alone. Okay, we need to participate in the global market. Okay, I'm talking from the pragmatic side of the equation. Okay, I export raw materials from Africa, refine it here in the US, okay, and then distribute it globally. Okay, most of African countries are pressed with forex exchange. Okay, the foreign exchange. Okay, this is one way of my group of companies, the Ola brand, is contributing to that forex. Okay, so as Stuart said, the fertilization program that they have is still a part of the infrastructure that Africa is going to need. Okay, not only in the surrounding Southern Africa, okay, for the Africa at large, in order for us not only to feed ourselves, but to feed ourselves, and then we have to send we have to export the excess to the global market. See, so I am not looking at just limiting ourselves to Africa alone. Okay, so during the days of our grandfather and our older generations, so we fed ourselves using just local methods of planting. But this is the 21st century. Okay, so we have to implement that mechanization to get a higher yield per acre, higher yield per hectare. Okay, so that we're not only going to feed Africans, but we need to participate in the world market. So we are going to need the collaboration from Stuart, from Atsuko, and from the world market, and from the world financial sectors. Okay, in order to grow. Say we grew Ola, okay, just from the bootstrap. Okay, so we have challenges in Nigeria as far as power is concerned, as far as the gas is concerned. When you produce things or when you manufacture you need a whole lot of infrastructure to be in place. But even without that, we're still making it. Because when I export, sometimes I export semi-processed products from Africa. For example, for cassava, okay, we do the cassava thing. Okay, we process it, but when I export it to the United States, I have to repackage it. The packing, it says volume in the marketplace. Okay, so when I do the packaging in the US, so the traceability is always there because we know the source that we're getting it from, and we know the standard that we've already set in various parts of Africa. In Zambia, I have a company that I work with. Okay, I even travel to Zambia, okay, to show them how you do the tracing, to show them how you collect your data. Okay, so those are the things that we have implemented into the system so that when we bring it over here, nobody gets sick. Okay,
Thank
so.
Sorry, thank you for that. I want to just make sure because the questions are starting to come in, so I'm blending in the questions. We're having our discussions amongst each other. I think, several of the questions really are focusing on this issue of being world competitive, coming out exactly to maybe if I hear from Atsuko and Stuart in terms of the traceability, the quality control, being able to really be competitive worldwide on those capabilities. And then if there is any sort of inputs from the two of you, kind of add into where Fatai was going with, in terms of the missing links. Several questions have come in, particularly on, and the story alluded to it, the startups, the new projects. I know you don't get into agriculture, but would you get into something that combines agriculture with the process, investing on the process side, if you will, on that? So if we can kind of attack those two questions. There are a number of other questions that were asked that people are asking about contacts. Obviously, some are coming in with weak connections from wherever. We will have a recording of this posted afterwards, so you'll be able to hear everything, and we will provide the context also to Invest Africa. But please, Atsuko, on the quality control, competitivity, the ability to enter into the world markets from Africa.
Happy to answer that question, but I saw also that Stuart turned on his mic. So do you want to go first, Stuart?
Go ahead.
I was actually going to do the other one, which was the primary and the startups. If you want to do the,
okay, wait.
I don't mind.
Please. So Atsuko, go ahead with the quality.
All right. Okay, thank you. Thank you so much. I think, I was actually with a colleague of mine, we were going through an interesting paper from Tom Reardon with regards to the midstream space. And in terms of food safety, what's very interesting is that actually for food supply chains, 90% to 95% of food is from local domestic markets. So I think as much as export and export quality is important, it's really looking at local domestic markets and regional integration. So I think when we talk about food safety, I think we also need to look at different standards that need to be applied. Of course, if we are going to have more regional integration, we'd love to see these standards being put in place. But I think there's a level of capacity building which is required as we go. 1, 2, definitely in terms of export markets, there's a higher level of food safety that is required, and that's definitely something that we need to aspire to. And I think what we need to keep in mind that in food supply chains, 85% of food supply chains are small, medium enterprises. So the question then is, what kind of capacity are we looking at? Thank you.
Thank you. Thank you very much, Atsuko. Stuart, please, on the question to start.
Add to what Atsuko said. I mean, I think the way we invest as well, in terms of looking at the provenance of our money, and it's coming from development finance institutions, governments, etc. So food safety, food standards is equally important whether we're exporting, whether we're selling locally. The last thing we want to do is invest in a business where we've got problems around food safety, and now we go and make a lot of people ill or even worse. So we're putting those systems in place no matter what we're doing, whether we're export focused or whether we're regionally focused or whether we're just in country focused. That's important to us, and we will audit businesses around that and verify that. So, but as Atsuko says, but there's a different level. I think when you start getting into exports into European, US, etc. markets, it's another level. I was going to pick the one up about primary. I think you mentioned Mima. We would do primary if it's integrated. So we will do integrated agriculture. And an example of that is in our first fund. And Fatai talks about Zambia, which is where I grew up as well. So I do like Zambia. But the egg business we've got there, we invested in this business back in 2012. I think at the time we were doing 250,000 eggs a day. We've since doubled the size of the operation, so we now do 500,000 eggs a day into the local markets up in the Copperbelt and also into the DRC. And we backwardly integrated. So we did buy, I think it was 3,000 hectares of farmland, and we do therefore produce about a third of our own feed requirements for our chickens. So we've got our own mill. We produce soya and maize. We also winter crop wheat as well, which then we just sell. We don't use that in the feed. So that is something that we would look at doing as well in the future. We wouldn't start with a farm and sort of go downstream, but I think we would start, with a processing business and look at sort of raw material supply going upstream, improving margin, improving security of feed supply. Zambia doesn't produce enough soya. So otherwise we've got to import for our chickens. So that sort of stuff we would do. I think the other question was startups. I'm not sure that Atsuko mentioned this as well, or it was in one of the responses on the chats. Startups are difficult for us. They really are. And I think a lot of us are going to say that. We're not a VC firm. We're private equity. So we're really looking at existing businesses and taking them to the next stage. That's what we're about. With that said, where we might look at startups is if we could bolt something onto an existing business operation. So we've done some stuff now. A recent investment we've made, which is it's a company called FES. It's a farming and engineering business. It sells tractors, services, and maintains and distributes farm equipment and mechanization. What we've done with that business is we've gone. I guess we've diversified it. We've now gone into contract farming work. So that was a new line that when we got in, we started up. So we now do all the farming for some of the big estates. For example, in Malawi, one big estate there, we've got sort of 130 tractors on their estate, and we do all their land prep, their ploughing, their land leveling. It's all pretty high tech. So this is precision agriculture. It's sort of sat-nav driven tractors. You don't really need an operator in a tractor these days. It's all satellite, GPS tracked, land leveling, all sorts of stuff we do there. We've also now gone into drones as well. So we're doing soil or sort of crop analysis with drones, and now we're doing spraying. So rather than in the past, people were sending tractors in to spray or sending planes in, we're now doing that by drones. So sort of 2 drones that go up in a swarm, map the field, and they spray the crops. Much more efficient, much more environmentally friendly, much more, very precision driven. You're not getting runoff of spray into local communities and into waterways, etc. And then we built a lab. So we spent $2 million, which is a startup effectively, but it's a startup within an existing business. So we put a $2 million lab into Blantyre in Malawi, and we're the only lab of its kind outside of South Africa it's a wet lab doing soil and leaf analysis for smallholders, for farmers, for large commercial estates. So I guess that's how we try to manage startups, is take an existing business and can we bolt things on, and at least you've got the underlying income stream and revenue from the main operation so that you can sort of afford to take some of these calculated risks rather than just go start up a brand new lab or a drone technology business. That's just not for us.
Thank you, Stuart. Maybe if I can add, as a practitioner of 50 years in all sorts of startups, startup is very simple. It's called left pocket and right pocket a whole bunch of times until you have something developed to attract others in. I mean, that's the reality, but it's also very important. You're absolutely right. The ability to be able to scale and tie together with a larger entity. Fatai, if I can turn, there's a series of questions that come in. I think, well, actually, we're all diaspora, one form or another, actually, on this particular panel. But I think several, looks like Nigerian colleagues from the name come back and say, okay, how do you see, so the US diaspora investing back in Africa into agro-industry? And they're particularly curious, given your sort of example, where in fact you're exporting raw material and sending back finished food product. Are there also opportunities to then be able to ramp up and do the Ola brands, if you will, the full finished food products in the countries you're operating and shipping out back to the US or Canada or Europe or elsewhere in the world? There's several questions that are pointed directly at you, sir.
No, I bet. Yeah, I bet. Actually, the primary objective of Fayous Group back almost 30 years ago was to feed our diaspora friends in the US. Okay, because I look at it this way. One day I just woke up and I believe that we went to McDonald's, okay, in our own town, and the food that we get from McDonald's in A is the same thing that we get in B, okay, even when I go to Chicago. So the taste, the quality is the same. Then I came to the under the realization that, hi, why can't we, or can I, do something to make sure that the food, that our own African food, is consistent everywhere that they eat it at? Okay, and it took me almost 15 years in perfecting the Ola brand of pounded yam. Okay, and how do I do it? I work with the experts on each field of the program. Okay, say from technology technology aspect and from the raw materials aspect, because you don't know it all. You have to collaborate with people that are professional in each sector. Okay, and that is what we did. And when we became, it was very difficult, but nobody is going to give you any money for startup. So we did it. So I invested a whole lot of time and money into the project, into the process. But the bottom line is I was able to persevere, okay, and make sure that the quality is number one. I've tried other competitive products in the market, but that is not as consistent as I like it to be. And that is exactly what I worked on for several years to be able to get to where we are.
Wonderful. Thank you for that. I think that answers many of the questions. Could I turn, I'm looking at the time here, we're about 6 minutes. I wanted to cover one area that several people have asked before we go to wrap up, and that is size of markets. What markets are interesting? This ties in, of course, into the whole discussion, Atsuko, they've had at the afternoon back with the regionalization and the continental trade agreement and all. What is, sort of, if I can turn this over more to the lenders and the investors, how do you perceive that? How is that an important issue? Because it's a couple of things. One is ability to scale, therefore makes it interesting as an investor. Two, the other part is any exports, even regional, obviously you've got a foreign exchange component to it, so that helps in terms of what would often be foreign exchange, forex loans into the projects. Can I get a little feel on that, how you perceive that growth of the market, size of the market? And the example I always use is there's a very simple reason why companies have grown and scaled in Nigeria, because Nigeria is a huge market. Can it be done elsewhere on a regional basis in a similar way? Maybe Atsuko first, and then Stuart.
Okay, thanks a lot. I might get my numbers wrong, but if I remember correctly, food trade in Africa, or the African, like the value of food is trade is going to be about 110 trillion US dollars by 2025, 2030. So couple that with 60% of food consumption in the urban areas of total food consumption. Couple that with disposable incomes by the middle class growing. So obviously for us, the markets that are growing are to be targeted are those urban areas, that huge growing middle class, and Africa. That is what we believe the future is, and that is why we are trying to make all these investments currently. Thank you.
Thank you much. Stuart, your perspective and sort of what are the interesting markets, and is that important to be able to do cross border, if you will, growth and scaling?
Yeah, no, I mean, some of the lessons that we learned, I guess, through our first fund. So currency is an issue. Currency is a major issue. I think you ask most private equity firms in Africa, what's kind of your biggest headache? And I think it's probably going to be currencies, one of the biggest issues. You know, we're dollar investors. We raise money from African Development Bank and lots of other people in dollars. We're investing into local markets. You know, and some currencies have been hit harder than others. Certainly in Southern Africa, we've seen some big hits here, Zambia and other places, you know, and for example, therefore an egg business, you know, so yeah, it's been fantastic trading locally. You know, we can't sell enough eggs. But reality is you're investing in dollars into a local business that's got dollar denominated inputs in terms of soya and maize, etc. They're still dollar denominated. 70% of your cost is dollar driven, and you're selling a local commodity. You're selling an egg for kwacha. And you can't, you know, as the currency devalues, you can't keep increasing the price of an egg overnight. You know, the local consumer won't take it. And the smallholders who you're competing with don't have the same operating costs, etc. So they're not going to have the pressure on price increases. So you've got to be quite fleet of foot and quite clever in terms of mitigating that. So yeah, you know, export, you know, into the DRC and other places has been a big help. What we look at now is we do like businesses that are multi-country. So rather than just single country focuses. So we did a large mechanization business in our first fund. We took it from 9 countries. We now operate in 15 countries. So that gives us really good, you know, sort of risk mitigation. There's always going to be stuff going on in one country, but that's weighed up against stuff that's going really well in another country and balances out. I mean, that fertilizer business that I described earlier, I mean, when we invested in that, it was a Malawian business. You know, who would have thought Malawi was the center of private equity for us? You know, it was doing 220,000 tons of fertilizer, had about a $10 million EBITDA when we invested. 4.5 years later, we'd grown that into Zimbabwe, into Zambia, into Mozambique. We'd taken it to 500,000 tons of fertilizer, over a $30 million EBITDA business, all through logistics. So all just increasing the logistics around that business into those countries. And that's what made it attractive then when we sold it. You know, we now took a business that was Malawi-centric and exited a Southern African, very large fertilizer player. And that was attractive to a Middle Eastern buyer who wanted to distribute their raw materials, their phosphate, into Africa. So that it's not a specific country as such. I think we just like multi-countries are good for us for diversification. Gives us inter-country trade, and also, yeah, gives us that access to more population through more countries.
Wonderful, thank you. Unfortunately, I have the unpleasant fact of trying to wrap this up and summarize. I'm getting, like in the U.S. Congress, there's 3 red lights now, votes coming up. But I really, really appreciate all of you. There's many questions. I try to capture them, bring them into the discussion. You will get a video recording, as Sandrine will speak to that effect in a minute. But I think just as a kind of parting thought, and this is as an old African, you know, in the bush out there on the continent, I really, what I'm hearing, whether it's diaspora, investors locally, foreign investors, lenders, or PE funds, private equity, this opportunity, I think what I see, the urbanization, size of the population of the continent, if and when we truly have properly ability to move across borders, being able to scale companies. I mean, talking about jumping technologies, going from the daba, the hoe, to the drone. how much more can you jump than that? But that's exactly the fact. And the key, I think, is going to be exactly what the ADB and Indigenous I-5's farming as a business. And once you do that, it's called profitability. Everybody gets more money in their pockets. Everybody went along the way. And in fact, that's where the jobs will be created in the full value chain. So with that, thank you really for this discussion. Big round of applause from around the world to you. And Sandrine,
Thank you.
turn it over to you. And I hope I captured as much as I could of the questions that came through. Thank you.
Yes, incredible discussion. Thank you all so much for tuning in. Atsuko, Stuart, Fatai, thank you so much for your insights. It is so encouraging to hear from experts and leaders in the field. It's an industry that we all need, and is integral to the success, the economic success of Africa. So thank you for your insights. For all of you, as Mima did mention, we will be sharing a recording of this session. And in the follow-up email, you'll be able to connect with all of our panelists through LinkedIn. They'll all be linked in that email. And our next series is actually a week from now, same time, next Thursday, the 18th. We'll actually be discussing the economic recovery of East Africa and some of the factors that will come into play there. We'll be speaking specifically about Kenya. And so if you're interested in that as well, I'll also include the registration link in the follow-up email. But I know we ran a little bit over, but thank you so much for all the panelists. Mima, incredible job. And if you'd like to learn a little bit more about Invest Africa US, you can navigate to our website, which is www.investafricaus.org. Thank you all so much for participating, and I hope you have a great rest of your day.
And to those in South Africa, happy sundowners. Okay, onward. Thank you very much.
Thank you, everybody.
All right,
Thank you.
bye-bye.
Bye-bye.
Bye.
Bye-bye.